Hall 1B. The theme for this year's Africa Energy Week is quite an exciting theme because it goes to the heart of where we find ourselves, not just in the world, but also on the continent. Enabling growth through an enabling environment. That's what we're focusing on. And part of the growth journey is about finding the right institutions and the right ideas to get behind, to partner with, to invest in, but also to make sense of. And that's exactly what this last session is about. It's about the innovators, the thinkers, the problem solvers who will be coming onto this platform one after the other, telling you what they've been fascinated about, how they've turned it into a solution, and how it can impact the value chain and your world. And that's what the last session will be focusing on. I want to welcome onto the platform the person who will be moderating the last session, the African Farmout Forum. And there are about 16, by the way, 16 companies that will be coming up here telling you about some of their exciting ideas. I've Googled a few of them just before the session. They do some interesting and amazing stuff. I want to welcome onto the forum Matt, who will be taking us through the session. Thank you very much.
Good day, everybody, and welcome to the African Farmout Forum. We've been running these Farmout Forums for about 6 years now, and they've been growing, more participants, so we greatly appreciate all the support we get from the oil companies. My name is Matt Turrell. I work with Farmout Angel, and the Farmout Forum is run in conjunction with Envoi and Moyes Co, who we have here today. So we have 16 Farmout presentations for you. They're quick-fire, 5-minute presentations we hope to rattle through. And you can see there's a good geographic coverage through Africa with one surprise location. If anybody can tell me what country that is, I'll be impressed. Any guesses? North of Australia? Timor-Leste. Perfect. Well done. Okay. So a very quick intro to Farmout Angel. So we're a fairly new company, we've been running about 4 years. We're a free-to-use farm-out listing platform and marketing company. So essentially we don't charge for any of our services, we simply promote stuff to the industry and promote stuff through our platform. And we have about 200 farm-outs listed in Africa. We have a pretty active LinkedIn page. We have about 2,500 followers on LinkedIn, and we promote a farm out of the week. And we do a Farm Out Friday where we push out and market whatever interesting is happening within the farm out world. We run promotional videos and also run booths at conferences to promote countries and promote farm outs and promote bid rounds. So I'm now going to hand over to Envoi briefly, Martin Riddle.
Now, I'm with Envoi, and Envoi is an acquisition and divestment advisor. We help companies run farm-outs around the world, and we help governments do license rounds. The map behind me shows a selection of the deals we have at the moment. If anybody would like to have a look at them, please do go to our website. There's plenty of information there. I don't want to detract from all of the speakers who are coming up, so please say either talk to me later or come to the website to find out what we do. Now, I think Africa has a quite phenomenal range of deals. It's not a homogeneous continent. There's so much there. There's so many deals around in places you did not expect. This is Zimbabwe. Now, Invictus have been exploring in Zimbabwe around the northern borders in a Triassic rift zone. The structures there are enormous. Invictus have successfully drilled them. How many people in the rest of the world have even heard of drilling for oil and gas in Zimbabwe? They think minerals, they think hard rock. They don't think oil and gas, and there's a lot there. Now, Scott McMillan, the Invictus managing director, will be here tomorrow, and if anyone wants to talk about his stuff with him, please do. It's a fascinating thing. You've got huge anticlines, you've got in this large basin, and it's all completely undrilled until Invictus turned up. There's loads more like that around the world. Right around Africa, please do look at them. Thank you.
Good afternoon. I'm Chris Moyes with Moyes Co. I have to say it's been a pleasure working with Matt and Martin. Matt, particularly at 2 o'clock in the morning or 5 o'clock in the morning, is always hard at work. He's done a fantastic job on the slides. We're an upstream finance or midstream finance group. We do transactions both sides. We have a reasonable amount of private equity that will look at oil and gas assets and have been working it. So we're really commercially focused, geologists and engineers, but at the end of the day, my main concern is how's the contract going to function and who are the people running the business. If you've got a tough contract, not well designed, then you're going to have issues. I'm supposed to be knowledgeable about that. Good people can ruin a perfectly good project, and bad people can do the same thing. Good people always find something else to do with their money. Parallel to that, we do quite a lot of arbitration and just straight project financing. We run a database a bit like the others. This is our universe of transactions that we go back to for value, because that's what we're looking for. And most of the value is driven by surface risk. It's something to do with the contract, the country, the location you're in. And then on the other side, we manage a database of oil and gas opportunities. That would be everything. That's upstream, midstream, downstream, pipelines. Thank you for that.
Okay, thank you very much. So is it the no. Yeah, perfect. Stuart Lake here. Hello. Martin, you're up. My apologies, my first speaker has failed to turn up, which is a great way to start. Sorry? Oh, there are brochures, there are timetables around. Sorry, I'll hand those out in just a second. Martin, you're up.
Thank you for this, everybody. Didn't quite expect to be up again so soon. And I'm going to run through Stuart's presentation. I have to admit, I know the basics, I know very little else, so it's really, please do read the slides, and again, talk to Stuart later, and he will be able to fill you in a bit better. Now, Somalia is a country that's really been underexplored, mostly for political reasons. From 1978, it's been at war, then you've had civil war, then you've had pirates. It's been quite difficult with the breakaway regions as well to actually get things up and running. Stuart represents a company that has gone in and got acreage offshore Somalia. Offshore Somalia, there are some vintages of seismic, but there's some quite fascinating geological structures. Now, I'll let you read this, and I won't go into detail on this. Basically, the structures are large. There's an awful lot of basins, tilted fault blocks all along the coast. The vintages of seismic covering them are quite old. Stuart and others are going in shooting more seismic and bringing it to a more modern era, shall we say. Again, I apologise because I don't know this one in detail. The other parts of Somalia I know a little better, but the prospects they mapped are large. It's not a little itty bitty bay, and they have a lot of running room. There's a lot of Somalia is not licensed, so whatever they find, they can expand, and there is running room. You can see in the lower map the size of Madagascar and the basins, the size of the relative basins. Again, I can't emphasise enough, these are huge. The running room there is particularly good. Now, jumping across to Timor-Leste, on the other side of the world, Timor-Leste it's one of the youngest independent countries in the world. It's only been independent for a couple of decades, and it's still finding its feet. The island is quite small, and it's divided between Timor-Leste and Timor-West, which is part of Indonesia. To the south, you have a number of companies exploring, like Barren Oil and others. There's been a demarcation between Timor-Leste and Australia on the median lines. You can see the various fields that have been explored on the Australian side. And there's Greater Sunrise, which is within Timor, which again is being developed. But there's still plenty of open acreage and plenty of potential there. Now again, it's not an area that many people know about, but there is a lot of infrastructure close by, both on the Australian side, immediately to the south and the southwest. So whatever is discovered can be monetised. As you can see, they have map prospects, and with Stuart's aim is to get partners into those prospects and get them all drilled and developed. Apologies, I don't know the details, so again, please do look at the slides, and I'm sure they'll be available afterwards. And those are the contact details. Again, if this is of interest, please do talk to them. Thank you. And apologise for the brevity.
Okay, thank you very much. Duncan? Apologies, there are timetables around, so if you're speaking, there are timetables around on seats. You can grab one and see the running order. Okay, Duncan Wallace and Chariot. Duncan, the floor's yours. Just go to the next slide.
Yeah, thank you very much. Thanks, Matt. Thanks for the opportunity to present to you. Today I'm going to present the Lucas onshore licence in Morocco, which is a near-term, low-risk and high-reward appraisal opportunity. First of all, for sort of context, Chariot's been exploring in Morocco for over a decade now. We have a large footprint of licences both offshore and onshore in the Rab Basin, which is an established tertiary gas basin in northern Morocco. You can see the situation just south of the Straits of Gibraltar, and it's really in a key location in terms of gas commercialisation. Morocco imports around 90% of its primary energy needs, and around 100 million cubic feet a day of gas comes from Europe to supply domestic power plants in country. There is also, in the onshore part of the Rab Basin, just south of the Lucas onshore licence, you can see historic gas production that is piped to industry at Kenitra. The current supply-demand gap has opened up very, very high prices in the Kenitra market area of $17 per MMBTU. So there's a real opportunity for early commercialisation, even of potentially small gas volumes. So what we're looking at the Lucas onshore licence are multiple drill-ready opportunities on a licence that is only around 12 months old. So Chariot has 75% operatorship, with ONIM having 25%. We've already drilled 2 wells this year, established very good reservoir quality, very strong gas presence, and of those 2 wells, one of those was a discovery, but it brings with it all of the operational experience as a company to drill low-cost wells, around $3 million per well, to drill and evaluate these exploration and appraisal opportunities. What goes with that gas price to really make it best in the world above ground conditions are the fiscal regime. It's a tax royalty system. The royalty is 5% for onshore gas, but there's a 10 BCF royalty-free period. The 35% corporation tax on oil and gas, there's also a holiday for the first 10 years of production. So really you pay nothing in terms of tax and royalty from most of the discoveries that we're likely to see. if you compare it, combining gas price and the fiscal regime, on a volume per volume basis, Morocco is over 10 times more valuable than US gas and 6 to 7 times more valuable than European gas. So you have to put that in mind when you see the volumes, and the rule of thumb is around $3 to $6 million per BCF of NPV10 of any gas resources that we can find. In terms of Lucas onshore, the obvious commercial route is to Kenitra to feed industry, and we have a partnership with Vivo Energies to do early CNG via virtual pipeline, and then laterly to tie into the existing pipeline to supply piped gas into Kenitra. Just to show you some of the variety of opportunities that we have, you don't just find gas through the drill bit, sometimes you find gas in an archive case and by reprocessing seismic data. And this is this opportunity we have here, which is re-drilling and testing a legacy gas discovery. This well, RGB2, was drilled in 1968. We now recognise from the log data up to 15 metres of net pay in the upper interval shown in yellow in the Miocene. You can see lower right what that looked like on the legacy seismic data. No real supporting amplitudes for that gas pay. On our 2024 reprocessing above that, you can see the very clear seismic attributes associated to those pays within the Miocene. What we also recognise, shown in blue, is a 100-metre interval of gas shows and also reservoir indications on those logs from 1968, and now illuminated by the reprocessed seismic data, a very clear structure with bright amplitudes and a potential flat event running across it. So there's an opportunity to re-drill RGB2 to appraise potential gas discoveries across two zones, to potentially unlock over 10 BCF directly at this location, but also surrounding RGB2 in yellow, multiple opportunities within that Miocene interval, including the RGB3 discovery that was tested in 1969, 2 million cubic feet a day to the north, and also the LAM1 discovery in the Tortonian, that blue interval, around 5 BCF, which remains also to be commercialised. So one well, 10 BCF directly, but up to 40 BCF of surrounding plate potential around that well location. The map on the left-hand side shows the 3D seismic coverage in pink, and the upper left part of that map shows the RGB2 re-drill opportunity. In the Miocene, that yellow zone from the previous well, we also made the OBA1 discovery earlier this year. The seismic section on the right-hand side shows the bright amplitudes associated with those good reservoir rocks and the gas that we found, and there's an obvious appraisal location up dip of OBA1 to look to establish the resources associated with that discovery and to get over a commercial threshold for development from the area. So that's a second appraisal opportunity. So really in the north of the area, it's around early commercialisation, but we also have more material exploration opportunities to the south. The Opera prospect of over 20 BCF of resource extending outside of the 3D into the 2D area, and for another example called Claire, around 30 BCF up dip from the RZK1 well we drilled this year with very good reservoir and strong gas shows. So lots of flexibility on the licence, no remaining commitments, $3 million per well. So if this is of interest, please come and talk to me. Thank you.
Duncan, thank you very much. You always talk very eloquently, and it's a pleasure to have you up on stage. Heritage. Dave? Perfect. So next up we have Heritage with Dave McGurk, who will be presenting the West Taro in Ghana. The floor is yours, thank you.
Okay, thank you very much, everybody. Pleasure to be here. Nice to see such a big crowd to welcome us on this first day. So today I'm going to speak to you about the offshore Southwest Tano offshore Southwest Tano licence in the Tano Basin in Ghana. And what we're looking for is someone to come and help participate in a multi-target, low-risk exploration well with rapid development options. So the location of the licence itself, you can see it lies here. Where are we? Unfortunately, that's not working. So we lie in between the Jubilee field area and the Ten development to the west of us. Directly to the south of us is the Pecan area, and we're nearby to the ENI production at Sankofa. So we lie right at the heart of that basin. Excellent. Okay, so the block itself then, as you can see on the left-hand side, we've got lots and lots of prospectivity on the block. And mainly today, what I'm going to talk about is focusing on the western side of this area. And this is the Ednam well that we're planning on drilling in 2025. On the block itself, though, we've got 4 main prospects. We've got Ednam, which is a Turonian system, Bubinga in Sedimanian, and then more Turonian systems at both the Mansonia location and the SE location. Upon the left here, you can see that that's our aggregated in-place volumes that we've calculated, and that comes out at about 2 billion barrels. The vast majority of which, as you can see, is in the Ednam system, which totals out at about 1.5 billion barrels. That's the in-place numbers. Now, when we're looking forward to 2025, we're seeking for a partner to come in and assist us in drilling this well, and we've got various levels of participation that we would be willing to talk to you about, whether that be coming in at the ground floor terms for the exploration well, but really in reality what we're looking for here is a partner to come forward with us through the extended life of the project. As I mentioned, Ednam is the initial well that we're going to be drilling, and that's scheduled for Q2 2020 or Q3 2025. So we've got a mixture of exploration and appraisal prospects on the block, and it's certainly very much an exploration prospect that we're drilling with Ednam. Where do we stand at the current stage then? Well, right now we have got our module. We're currently negotiating for our module, but we've pressed ahead with the other aspects of drilling. So we've got our long lead items on order, the wellheads are on the shelf, our pore pressure frac rating work's been carried out. So all of that pre-program work's been carried out, and we're working towards now contracting that module. Permitting obviously it still needs to be carried out, but we've got plenty of time to do that before we hit our deadline in 2025. So our primary well, the well that we're planning on spudding is Ednam. It's a 3-target well. Now, within different levels of the well, I think we've got something like 5 different levels within the Ednam target area, but the well location itself is going to target 3 separate areas, or 3 separate levels. The first level is an upper Turonian target, and these are basically what we consider to be the youngest sand input from the Jubilee system. So it's the final terminal node of the Jubilee system, which encroaches into our area. As a result of that, we're expecting very high pore parent sands. We're expecting an oil phase. It's going to be light, sweet crude, no nasties, no viscosity, 0.27 points, etc., etc. All of this oil trades the premium to Brent that as we know right now. So that's going to be our primary target, and that will net out about 465 million barrels recoverable. The second target then underlies this, and this is a Sedimanian target, much more akin to what you see on the eastern side of the Tano Basin in the Sankofa area. So this is directly analogous to Sankofa, Iban, Akoma, Abracuma. All of those discoveries that ENI have got under development on the eastern side of the Tano Basin. This is interesting because in the Jubilee area itself, you don't get any of these Sedimanian slope channel complexes. They really just start as you move slightly further to the west and come onto our acreage. So that's something that we're working towards. We think that this is going to be a very interesting to open this play further to the west than it currently just restricted over the Sankofa area. The further target we've got in this well is slightly different again. This isn't actually a Jubilee source sand. This comes from the western side, and this is a 10 source sand. Now, for the well location that we've got, that well location will only target these sands on quite a marginal location. We hope to get some encouragement from that well penetration. So when we go further to the south to appraise the initial 2 targets, when we move further to the south, then we find much thicker, much better representative sands from this 10 input area. So combined, as you can see, we've got 465 million barrels, 431, both at kind of a plus 30% chance of success, and then over 20% chance of success for an extra 200 million barrels in that 10 system. The good thing is, of course, that we are really beautifully placed for rapid development, rapid monetization of these discoveries that we're making. where we lie is in between both the 10 FPSO and Jubilee FPSO, and we've had plenty of discussions with the Jubilee and 10 partners about accessing the available ullage on these two FPSOs. As it turns out, that's much more likely to be the 10 FPSO. It's the one with more ullage available. So discussions have been going on between ourselves and the 10 partners on that. So that's one way to evacuate the oil. The second option might be for any future peaking development that's going to be developed in the south. And then a third option may be for if a particularly large company would want to come in and farm into the area, is to actually aggregate all of the other currently stranded opportunities that lie around the area. There's plenty of discovered barrels in the area that just need to be aggregated into a single FPSO for evacuation. On top of all of that, of course, is that should we actually make a peaking-sized discovery, we reckon about 300 to 350 million barrels recoverable will be enough to get us over the line into a standalone FPSO development. So there's plenty of different opportunities, but I think for the first stage it will be a rapid development option through the 10 FPSO, if we can come to that agreement. Rapid development, rapid monetisation through that area. And so with that, then, just like to say thank you very much for listening to me. If you'd like to get access to these slides and also to the poster, which is going to be on Matt's booth, you can scan that QR code, that's right there for you. And if not, you can come and speak to myself. I'm the exploration manager for the Ghana area, or Nick Baker, who's our country manager, and he's with us here as well. So thank you very much, and I hope to hear from you also. Thank you.
Okay, thank you very much. Fantastic presentation, thank you. We need to go to the next slide deck, is that right? There should be a PowerPoint file called session 02. Effie? Effie is here, I've spoken to him. Ah, he's coming, perfect. Okay, so I'll welcome to the stage Effie from Dajo Group, who's going to present an opportunity offshore Nigeria to you. Effie, the clicker's here, and you've got a laser pointer here. Thank you.
All right, good afternoon, everyone. I'm Effie Domingo. I'm the MD of Dajo Group. I'm here to present to you one of the key strategic deepwater assets that's been discovered in Nigeria. And our prayer here today is to look for a co-developer that can sort of develop this asset into production. Significant exploration activities have been done on the asset. So I'll give you a brief overview of what's been done to date. Also highlights, the key upsides in the asset, and thereafter give you our idea of what a development plan might look like. So as a summary, there are two key structures in the OPL 322 license. The one being discovered named Bobo. 3 wells have been drilled into that acreage. And there's also a significant prospect called the Ada prospect. From the 3 wells, about over 300 million barrels of soy has been discovered, and close to 2 TCF of gas also. As you can see, there's significant upsides as contingent resources and as prospects. On the Bobo side, we are estimating about 400 million barrels as further resources as contingent. And the Ada thrust has a prospective volume of close to 1 billion barrels. It's your typical Niger Delta deepwater turbidite sands, very good porosities and permeabilities, So there's significant upside, in the assets, good discovered volumes. There's definitely an exploration play to sort of prove more volumes, more recoverable volumes, and then develop the asset on top of that. So we internally are taking a sort of phased approach as a development plan. Whereas we target each of the resources in the order of maturity. So what we've done is to come up with a notional plan of about 21 wells. First of all, targeting the discovered bubble acreage, and then after that, go and target the contingent resources and then the prospects to improve the field life of the asset. Just a brief history, as it stands now, block ownership is Dagger owns 50% and NNPC owns the remaining 50%. Fiscal terms are currently under the sole risk and PSC structure. Both fiscal terms also exist in the asset. One-on-one discussions I can explain that in more detail. As it stands right now, as I mentioned, 3 wells have been successfully drilled, and seismic data was acquired. On top of that, we've also done some studies to try and do some CSCM acquisition to further de-risk the assets going forward. So this is just a brief overview of the 3 wells that have been drilled. First one being Bobo in 2005-01, and there was also a sidetrack. As you can see, about 145 meters of net sand. The second, here we encountered a bit of a challenge. Net sand here wasn't what was expected, but still decent. It was about 70 meters of net sand. At Bobo 3, which is drilled in the central part of the Bobo structure, that also discovered by 106 meters of net sand. So just as a summary on the volumes, we sort of grouped the volumes into different baskets. So the discovered volumes, as I mentioned, is about 600, and close to about 2 TCF of gas. Now you have your NFEs and your IFOs and your sort of your near field exploration targets and appraisal targets of another close to just over 300. And then an upside, which is completely prospective. We're estimating close to 1 billion. So there's significant volumes that have been found, and also there's a significant upside in the asset. So as a notional development plan, we sort of targeted to develop the bubble structure, and with 2 drill centers in the bubble structure, and then an additional one once AGA comes on stream eventually. So we are estimating, you could easily get close to 100,000 barrels of oil per day from this asset. And close to over 400 million SCOF per day. So just to conclude on some of the commercial highlights in the assets. As it stands right now, there is a conversion from a prospecting license to a mining license that is being considered at the NUPLC. The minimum work program when the license was first awarded has been met, so that was to drill 2 commitment wells and to do some seismic reprocessing. So a 3rd non-commitment well was drilled. And going forward, as some of you might know, the federal government has passed some significant fiscal incentives for deep water. So 322 stands to benefit from some of those incentives. So yeah, I'll be happy to have a one-on-one discussion with anyone that finds this interesting. Thank you for your time.
Effie, thank you very much. It's a great pleasure. Thank you. Okay, so next up we have Mr. Ben Sayers. He's a great friend of mine. I've worked with Ben for many years. And he will be presenting an opportunity offshore Sierra Leone on behalf of FA Oil. Ben, the stage is yours. You've got a pointer and a clicker here.
Thank you very much. Good afternoon, everybody. I've got quite a few slides to get through, so I won't dwell too long. So, who are FA Oil? Probably the first question some of you are asking if you don't know who they are. They're owned by Nigeria's wealthiest woman, Farmout Angel who's affectionately known as Madame. She made a move to Sierra Leone in late 2023. She is the CEO of FA Oil, but she's also a vice chairperson of Farmout Oil, who have a stake in the Agbami field in Nigeria. So she has true pedigree in terms of oil production, as well as well-financed. Following the license round, the fifth license round, 6 blocks were awarded, 53, 54, 55, 71, 72, 73, all to FA Oil. And the President of Nigeria and the President of Sierra Leone believe that this is also the first step in a new working relationship between both countries. So not only is there the financial backing, the great prospects I'm going to show you, but there's also the political backing as well, which everybody in this room knows you need to work successfully in Africa. So where are the blocks? Here they are. It's a total of 8,160 square kilometres. It water depths from a vast range of 50 metres in the shallowest point down to about 4,000 metres. We've got oil and gas mature source rocks, and we've mapped 14 leads, which I'm going to show you at the end of the presentation. So the world database that we've had to use to do the interpretation is listed on the screen. I won't read them all out. The significant point to note, the animation's not working. The significant point to note is that 6 out of these 11 wells did discover some kind of gas show or had discovery. And Sabu 1 is actually in Guinea, but it's the closest well to the blocks, and I'll show you that on the map in the coming slides. The seismic database that's been used is nearly 4,009 kilometres of 2D data from 2000 up to 2017 vintage. This is all available in a data room in London, Freetown and Houston. As you can see on the map here, the green is in Guinea and the blue is taken from the Sierra Leone database with an example line here, courtesy to TGS for the data. Gravity and magnetic data over the block. You can see on the gravity data is a very convergence of lots of different plate movements going on. It's a very complex block, and you can see that in the seismic. But the key thing to note is on the magnetics on the right-hand side, it's quite benign. So we're not expecting there to be any intrusives or volcanics or anything that could potentially screw up the reservoir. Looking at stratigraphy, animations aren't working. Looking at stratigraphy, the key point to note is that we've got mainly upper Cretaceous plate reservoirs, all integrated reservoirs inside a shell unit, providing the cap rock, and all of the sources are coming from mature sources, and they've all been proven, as you can see on the left-hand side of the slide. So the source rock, Sabu 1, as I mentioned, although it was non-commercial, did have oil shows in Guinea Conakry. It shows, the data showed that there was a residual large column of oil, but it had failed track. And on the map on the screen at the moment, you can see all of the different seeps showing that there really is a lot of oil sloshing around in this basin in Guinea, as well as the non-commercial discoveries that have been made in Sierra Leone to the south as well. Talking about the reservoir potential, the porosity and depth to seabed, you can see the porosity that we're looking at here when plotted on the map. These are all of the wells that we've used. Gives a permeability of about 21 to 26% with a porosity of about 50 to 500 millidarcies. So great poroperm statistics. The reservoir, again, Sabu 1 well is the closest well that we tie to. It is only 35 kilometres to the north. It did intercept with 3 different reservoir units, and sidewall cores were taken from these, showing porosity of between 13 and 32%. So we're quite happy that there is going to be very good reservoir quality and source quality. So looking at the structural style, this is a line going from the very shallow, as you can see, the 50 metre right up to the 4,000 metres. It's quite a complex line, so we'll just skip to the geoseismic section. And the key thing that I want to highlight is in this block of 8,000 squares, we do have multiple plays going on. So we've got the pre-Simriff conformity creating a nice trap. We've got the tilted fault blocks. We've got drapes over the horse blocks. We've got a lot of throughway dip fault closed blocks, which I'll show you on the leads in a minute. We've got channel Simriff plays, and we've also got fan sway plays as well. So now we'll go through a quick lead catalogue. You can see here this is lead 1 on the left and lead 2 on the right. They are a Paleocene channel fan system play. The key thing to note are the numbers in the P50 line. So we've got P50 oil initially in place at lead 1 at 297 million barrels of oil, lead 2 318. So these are some of the smaller ones on the block. So we are talking about significant oil to go and search for. Moving on a bit, these are some freeway dip fault close plays. Again, this is lead number 7. And the key point here really is the barrel of oil, P50 at 321, and this is a recoverable figure on this slide. The next lead I wanted to show you, this is lead number 8, and again, fantastic seismic, 2D line obviously. This is where we're located, out into the slightly deeper area, and I'll show you the depth map in a minute. But we've got P50 recoverable number of 421 million barrels of oil. So this is the depth map, and as I said, it does go from very shallow to quite deep. So we're talking 50 metres, the whole of the top of the block. You've got some shallow drilling opportunities, very cheap wells to be looking at. But it's quite a steep shelf break, and as you see on the seismic line, that opens up a whole new different level of play that we can look for. And if we go on to the top Sin Rift, this is the deep reservoir target, sat in between this Sin Rift high axis running through the middle of the block. This does mean that we have the Albion mature source rock either side of this deep feeding up in. So we've got the deep and mature source rock feeding into the higher uplifted reservoir system. So just to summarise the leads, there's a significant leads database identified. It's a varied portfolio. It's a very low well drill cost on some of these. They're all in shallow water between 1,000 and 2,000 metres below mudline. We're also looking at the current risk range of about 10 to 20%, and it needs 3 leads to de-risk these further. But if one of them is a discovery, there's a lot of good follow-up and follow-on potential. And now the reason I'm standing here from GeoPartners is because we're going to be acquiring a new multi-client 3D over this block. So those 14 leads that have been identified next year, they're going to be very quickly matured into prospects where we can get some real firm volumetric numbers and get some confidence in the numbers ahead of drilling. Hopefully we're going to be acquiring as soon as the turtle migrations are finished. Obviously once we respect the environment, we're ready to go as soon as those turtles have moved on. We've got the vessel lined up, we've got the funding in place, and we hope that you will join us on the journey. Just like to acknowledge the people who put together a lot of the work that I've just presented very quickly, and also to TGS for allowing the seismic data to be used. Thank you very much.
Ben, thank you. Greatly appreciate it. Okay, you may have noticed we were just running around doing a little bit of IT work at the back there, so I'm very pleased to announce that we can now welcome Chris Johnston onto the stage from Africa Oil. Do I need to click next slide, or? Perfect, here we are. Chris, thank you very much.
Hi, good afternoon, everyone. Chris Johnston from Africa Oil Corp, and I will be presenting the Equatorial Guinea opportunity, both EG31 and EG18 today, and my colleague will take over about halfway through to present the second opportunity. I was asked to put in a legal disclaimer, there you go. Okay. So, starting off with why we're in Equatorial Guinea. So, the Equatorial Guinea offshore offers an area with lots of discoveries. So we have a number of fields. We have Zafiro, Alba, Sabre, and the Alan and Aseng fields. Lots of fields on production, big discoveries, billion-barrel fields, multi-TCF gas fields. So Africa Oil strategically identified 2 licenses. The first one is in the northern area, and that is EG31, and this, we believe, is a mature basin. You're surrounded by gas discoveries. It's a tertiary play, and it's we believe, an infrastructure-led exploration opportunity. So you're very close to the LNG facilities on Bioko Island. And then we have EG18 in the south. And this one is, it's a frontier opportunity, but an emerging basin. So we'll talk through both projects today, but I'll be focusing on EG18. So this is a upper Cretaceous play, and so we can chase the deep water turbidite reservoirs, which have been very successful in other parts of Africa. And we believe it's very similar to the Orange Basin, some of the so good success is possible. So I'll start with the EG18 project before handing over to my colleague Lisa. And we're going to focus on the giant, one of the giant prospects we've identified in this acreage. The acreage is covered by 3D, as mentioned. Sorry, it's very strange. I can see someone else's presentation clicking through in front of me down here, so that's why I'm slightly thrown here. So, there we go. Thank you very much. I've sort of recomposed myself. So, EG18 is a frontier opportunity, giant prospect we've identified called Jasper, and that's the one we'll talk more about today. We've also identified a number of other prospects. We have a big tertiary fan in this block. We have Jasper prospect that I'll focus on, and then we have some deeper upper Cretaceous prospects as well. Similar potential to the Orange Basin, we hope, and it really is a multi-billion barrel prospect, and we believe the risk is sufficient that it could get drilled and someone should be interested in farming in. So it was a frontier area, and we think it's an emerging basin now. There's been 2 wells drilled recently in the area. L2 was drilled by Chevron, and it collected some valuable data, and it de-risked the exploration plays in this area. Between these 2 wells, we believe all of the risk elements have been proven. So we have great reservoir quality, we have high heat flow, it's about 50 degrees centigrade per kilometre. So an oil mature, source rock will be mature at the depth in this acreage, and we believe it's the key area for the chasing the upper Cretaceous in Equatorial Guinea. L2 also found great shales, so seals will be world class. More recently, the Jacker well was drilled, and there's some good publications on this well in the GeoX Pro just recently. And some of the information that's been published for that well improved. Source rock, the first time in this part of the offshore basin. It was an upper Cretaceous source rock, and it also proved some Campanian sands that had oil charged to them. So essentially, just very recently, some of the data that's been published has de-risked this offshore area. So we'll cover Jasper in more detail and how it ties to these 2 wells, and I believe it's very exciting. So potential development for this prospect would be a standalone FPSO. It's 2,200 metres of water, a long way from shore, but as it's big, it will be developable. So what's very interesting is the L2 well just drilled to the east of this block. It was drilled in a record, very benign drilling conditions. The well from spud to TD was about 2 weeks, and it came in massively under the budget at about $15 million. So drilling this prospect isn't going to be the many hundreds of millions that some of these deep water wells can be. So just to go into the geology a bit more, you can see I've highlighted our main prospect with the orange box in the middle, the Jasper prospect. It's a Class 2 AVO, Class 2, Class 3, and we've recently identified what we believe to be a DHI for this prospect as well. So that means it's a stratigraphic prospect. Normally a stratigraphic prospect might have a 10 to 20% chance of success, but now we've identified a good AVO signature and a DHI. We believe it's probably in excess of 50% chance. Over on the right-hand side of this cartoon section, you can see the L2 well, and L2 was critical for this prospect. So we can tie the 2 Cretaceous sands that were proven in the well to our prospect. It's same time horizon, and it's a very nice, and I'll show you on the next slide what the amplitude structures look like. The reservoir quality I've mentioned is good, but it's probably the best Cretaceous reservoir in West Africa I've ever worked. It is 30% porosity and higher with 2 to 5 darcies permeability. So it is an unbelievably high quality reservoir. It's about 30 to 40 metres thick, each one of those sand cycles in that well. And if I just put the Jackal well results on, you'll see right there. So this was published in the GeoExpo recently. Oil samples were taken in Campanian sands, and you can see that, you know, this well's projected on, but what it did do was prove there's a working petroleum system, oil's been generated. The source rock at the Jackal location was immature, and where it's mature is actually right near to this EG18 acreage. So the oil is believed to be migrating from the kitchen just west of our block all the way south, and so it will also be migrating in all other directions, particularly up dip to our prospect. We've mapped faults from basement that come up through the Cretaceous section, sometimes all the way to tertiary. So we've got faults to aid migration into these basin floor fans. We've completed some rock physics. So the rock physics actually shows that you should be seeing a class 2 AVO for these types of high quality sands. Because there's such high porosity, we should see brightening on the far stack, that means. And what we'll do is look at this seismic anomaly in more detail. So we've mapped 8 horizons for this prospect. It's a good upper Cretaceous section, it's thick. And what we see, if you can see the inset maps on the right-hand side, is you start seeing some basin floor fans. There are channels. There are what look like 2 separate fans on that full stack amplitude extraction, one in the north and one in the west. But this particular sand interval, the UC 540, is not bright on the far stack, it's actually bright on the nears, and this is not what we want to see for hydrocarbon presence. So we've identified 2 horizons that have this amplitude anomaly, brightening on the far stack, and this is our key prospect now, the Jasper prospect. You can see on the seismic section there's a big bright reflector, and that's the far stack response. So we believe that to be oil charge. We've recently identified a potential flat spot, and we're also doing some more advanced geophysics to understand this basin floor fan. So if you look at the bottom map on the right-hand side, you can see a very big, bright red and yellow shaped like a basin floor fan. It actually sits between the other 2 deeper fans, so it was filling in the basin floor topography. So I believe there's a high chance of sand presence. It correlates up to that well, the L2 well, and with the far stack response and the DHI, I think this is a great prospect. And it's not just a big prospect, it's actually giant. So you can see on the scale bar, that's 20 kilometers long. So it is a true multi-billion barrel prospect. And that brings me to the end of EG18, so I'll pass on to my colleague, Lisa Fullerton, for EG31. Thank you, and apologies for the slight...
Great, well, thank you very much, Chris, and great to be here. So I'm going to move further north now, so still in Equatorial Guinea, but I'm going to go to EG31. So this is very, very different. It's an infrastructure-driven project, and it's appraisal with an exploration upside of multi-TCF. So we're adjacent to the world-class Alba field, which is 7 TCF of gas. And also what's great is it's a short-cycle development opportunity, which is close to the Punta Europa LNG facility. So a very easy short-cycle development project. So what is fantastic also about this area, it sits in the outboard Niger Delta. So it has the structures that are formed in relation to the delta system. So for example, the Alba field is a toe thrust. So you have the structures, but you've also got the reservoir development there. There's a major sediment fairway coming from northeast to southwest through the Alba area, which is related to the Cross River complex. So what's also about EG31, there's analogous reservoir and structures all across the area, as I said, Alba, and we've identified structural and stratigraphic opportunities of the multi-TCF range. So we believe that exploration, multi-TCF exploration has been missed. So the block sits between the Sapphira field and also the Alba field. So we've identified up to 8 prospects in the area, a couple of very major opportunities. Now we don't just believe in looking at the block on its own, we want to understand the regional development of the area. So we've gone out and we've built a very large seismic database. It fully covers our block and it extends up to Alba and across the Sapphira. We've also put together an extensive well database, so we have 20 wells. So we've been able to look through all the wells and identify the reservoir, the charge, the source and the seal. And what's also critical is on our block there have been 4 wells already drilled, but the issue is that 3 of them were drilled in the 1960s. But 2 of these wells are discoveries, so we've got the 9A1X well and also Gardenia. So we see the opportunity as appraising structures on the block, but we've also identified another 8 prospects. So I'll take you through 2 of the main prospects. So we have Massive, which is in the west, and Whistler in the east. And these are between like 40 and 100 square kilometre area. And they're primarily derived by looking at the amplitudes. So having done some rock physics work, we know that amplitudes, high amplitudes, which is the yellow and orange, delineate good quality reservoir. So what we've been able to identify are major fan systems, such as Whistler, also channel feeder systems which go down into the Massive area, delivering what we think are large quantities of sand. The Massive is very different. Massive is also a 4-way structure. We see the channel feeder system bringing the sand fairway down, the solar sand very thick. We see multiple amplitudes all the way through the sequence, so we feel that it will have multiple reservoir levels at the Massive prospect. It's been tested by 9A1X, it's a gas discovery, but it only tagged the top part of the structure. So we believe Massive is a much larger structure, could potentially extend all the way to Termalina, which is another discovery, which is shown on the seismic line. So I'm showing you the seismic line here. There's a line that goes from Termalina all the way down to Gardenia. Gardenia is a small 4-way closure, a proven discovery, and Massive includes 9A1X. But at the moment we're doing some PSTM work to try and work on imaging and also understanding the depth structure, so we may have a better idea on how big Massive is. And then going to the east, the other prospect is the Whistler prospect. So this is a major amplitude anomaly. It's potentially the largest undrilled anomaly basin floor fan in West Africa. It's classed as a Class 1 AVO, and this is similar to discoveries in the area. So Gardenia, Alba, and the OI fields have this Class 1 AVO response. And what's also important is down dip of this anomaly, the Benito well has tested very high quality 20-metre reservoir sand. So we believe that the quality will remain very good in this area up until the Whistler prospect. So finally, I just wanted to end with a slide to show the 2 different opportunities that Africa Oil Corp are bringing at the moment. So we have EG18 that Chris spoke about and EG31 that I've just gone through. Now, they have similarities. The similarities are that we work with an excellent partner, G-Patrol, so they have 20% and we have 80%. We're looking to farm both of them out. And they have multi-TCF, billion-barrel prospects, so lots of opportunities. But of course, they're very different. EG31 is close to the Punta Europa facility, so more appraisal, easy to develop. And EG18 is more the FPSO opportunity, but as Chris said, relatively low cost to drill. So what I wanted to end with is say, well, we're looking to open a data room coming in Q1 2025. So if you would like to see more, we're doing a lot more rock physics work, we're doing PSTM, then please get in contact. Thank you very much.
Chris and Lisa, thank you very much. Fantastic presentations. I'm pleased that worked out well. Okay. So, I'm now pleased to welcome to the stage Wade Chaweko. I asked Wade to sit at the front and look enthusiastic, and he's been doing that admirably for Wade, thank you.
Good afternoon, ladies and gentlemen. First of all, I'd like to thank NJ Energy Chamber for putting on Energy Week and Moyes, Farmout Angel Envoi for having this session today. I think it's a great way to start this conference. You know, our group have been in Africa now 37 years doing natural resource development. It's fair to say there's no shortage of natural resources in this wonderful continent, but what we always struggle with is a shortage of capital. So I think this is a great venue for companies like ourselves and the previous presenters to showcase what we're doing in the continent, not just from a technical standpoint, but from a commercial standpoint, just to show the opportunities and show the successes. So we do thank you for this opportunity. I'm actually giving two presentations today that kind of show two distinctly different type of investments that we do. First one will be Deepwater Namibia. The second presentation will be a presentation on development of oil and gas fields in Nigeria called the Marginal Field Program. The map up here obviously shows the significant Orange Basin. We all know how active it's been, one of the most successful basins in the world, significant discoveries. We were fortunate to get involved in the Orange Basin 14 years ago, so we were one of the early entrants. We kind of followed in the coattails of a Canadian listed company called UNX, which farmed out to the famous HRT, Mr. Mello, who I hope to see around this week. They kind of really started the whole endeavor. But even before HRT got involved, I do have to congratulate my dear friend, Mr. Knowledge Kati, who's in the room. Knowledge really, working with the government, really helped open up this space. And it was people like Knowledge, local partners, that really worked with foreign companies like ourselves that really opened up these opportunities. And that's really the success that we have in Africa, is working with local partners. We were fortunate to get involved in what is now the Shell licenses. So in our company, Signet Petroleum, in partnership with Mr. Kati's company, we were early in. We kind of saw the technical challenges and successes and disappointments that HRT had. We went in with our technical team, acquired 2D seismic data. We actually acquired data on the Shell license, which we owned in Signet, and we also owned which is now Palmati, the Chevron license. That was another private company that we had funded. Based off that 2D data that we acquired on the now Shell licenses, we ran a data room. We did that in London with First Energy, and I ran into Ralph earlier this morning, who was very instrumental in helping us do that farm out. And it was a great transaction where we owned the block for about 18 months. I think our CapEx with the block acquisition, 2D acquisition, which was a multi-client program, we had about $4.5 million spent on it. We sold the block to Shell for $95 million, and we still have some residual economics as they progress with field developments. We do get some additional residual cash. So we do know the basin. The Chevron license we had, we shot the 2D, but unfortunately, after we farmed out to Shell in 2013, there was a long period where there was no activity. We held that block, Palmati, for about 3 years and figured there's no activity, Shell's delaying the drilling, so we actually relinquished it. Once again, my good friend, Mr. Kati, his foresight, picked up that license with some additional partners and went on to shooting additional data and having a very successful farm out to Chevron. So, you know, we have a little bit of history in the basin in the country. And now we're actually working with another local group called Petrovina Energy, who have acquired with Moyes. That's our group, Origin, in partnership with Petrovina. Petrovina have acquired the 2712A license, which is just west of Chevron, kind of northwest of, or west of Woodside and northwest of Chevron. We've acquired that license, and our local partners have actually been working on the southern license, 2812. Which is 2812A, 2812B, beside Chevron. So we're working with them on that license. They're working through a few challenges they're having on that license, but I think there'll be a resolution on that license soon, and we hope to be participating with them in that license as well. Obviously, we don't have to go into the detail. There's more and more discoveries being made. You know, Shallow Graph, Total Venus, Galp's recent discoveries, Galp have a rig drilling again. on their license. Chevron's drilling December, January. So it's one of the most active exploration areas in the world. Our business model is to get in early, working with local partners, acquiring some 2D data. In some cases, we may have to acquire 3D data. Then we work with a group like Moyes and do a strategic farm outs, create some competitiveness. So we think it's a great area to be in and great investment opportunities. If you look at kind of our great track record, we had Shell, $4.5 million, and we sold it for a nice number. Look at Santana, who was Mr. Catty's partner on his licenses, where they put 4.9% in 4 licenses offshore Namibia. Initial raise, that's a listed company in Canada. The initial raise was about $13, $14 million. That company today has a market cap of over $450 million. So if these things are structured right, with the right partnerships, you can make significant returns. And that's what we're presenting today, is just the opportunities that are out there. This just kind of goes through our team and what I kind of talked about with our farm out success with Shell and involvement in the early days in the basin. Why we like the 2712 license is when we're kind of at the top is kind of a seismic section. There's some limited data. There's about 11 lines. Through the 27 block, obviously we need a lot of infill. We need to reprocess some of the historical data. But what we like about this data set is it's showing good source rock, Appian source rock, which will have being derived from the Kudu shales. Thick sand, clean sand sections, kind of above that source rock, pinching out against the outer high. So we can trace this outer high with the SDRs all the way from Total Venus discovery up into our northern block. The sand is coming in from deepwater fan systems. So we feel we have a very good analogy to what's been discovered in Venus on this license. Obviously, with additional seismic data, we'll be able to confirm that. So we're looking, forward to acquiring some 2D, potentially 3D, and running a farm-out process. Thank you. Now, this is a totally different investment opportunity that we've been working on. This is really how our group got involved in Africa. It was in Nigeria. We were one of the first entrants 36 years ago. And how we got into the country was we started investing and financing indigenous partners. So the government had an indigenous bid round where they allocated fields to local oil and gas companies in an effort to create an indigenous industry. Shell dominated the country, and they wanted to create local content. We were fortunate to be in the early days of the Nigerian indigenous development. We financed such companies as Amni Petroleum. We developed their initial fields, got Amni into production. I think our production, we got up to about 52,000 barrels a day. We also opened up the Benin Basin between West Nigeria and Benin Republic. We drilled 2 wells there, which were successful in developing and discovering the Ajay field. And then in 2003, the government implemented this great program called the Marginal Field Program. And what that program did was any fields that were discovered and owned by a major, and all the majors have partnerships with the state government and the NNPC, they would carve them out of a larger license and call it a marginal field, and they would allocate those to indigenous companies. The entry cost was very low. The original entry cost in 2003 was $100,000 as a signature bonus. And what was great about this program was it encouraged local participation and created really the indigenous industry. And today you have significant successful companies from Midwestern to Platform Petroleum to Seaplat. And this really was the program, I think, that kicked it all off. And what's great about these marginal fields is, they use the word marginal. I mean, I like that from the standpoint that hopefully, when they're farming them out to us or selling them to us, they think it's marginal, so the economics are poor. But we developed one field in a predecessor company we had called Mar Resources, where the field had an earmark of 4 million barrels in it. There was one well, so we re-entered that well. Well started producing at 2,300 barrels a day. So basically, we kept drilling development wells, and we moved the barrels from 4 million barrels to 10 million barrels to 15 million barrels Our recovery rates always improved, and we ultimately took that asset to 85 million barrels. And our peak production was 38,000 barrels. Significant success for what you call a little marginal field. So that's just a number of opportunity like that. The biggest challenge that you typically have on these type of assets is funding. It's typically hard to get debt money from the local banks. They want you to be producing 3,000-4,000 barrels a day, or the trading companies, Shell Trading, for example, do a lot of work in the country. They want to have significant production before they'll give you debt financing. So it's always a challenge, but typically these things have to be financed with equity. A lot of times we go to the public markets, but if the public markets are there, then we need to look for private investors. But there's over 2 billion barrels of proven undeveloped oil in Nigeria. So it creates significant opportunity. This is one that we have that we're developing now called the Oza field. It sits on OML 11, which was Shell's largest block at one time. That block expires when I was controlled by NNPC. But this was one of the original marginal fields that was carved out in 2003. We got involved a couple of years ago. We entered one of the wells, produced over 1,000 barrels a day. Unfortunately, we had some downtime in the pipeline, but that pipeline is now up and running. So currently, we are going in and doing a re-entry in one of the older wells, just perforating a new zone. Then we'll do a sidetrack out of another old well. That'll bring production to around 3,000 barrels a day, and then we'll start doing development drilling. Each development well, because we typically do dual completions, we'll have 2,500 to 3,000 barrels a day, with the dual strings. So they're not significant in any which way, shape, or form. Great production and great economics, which I'll explain to you in another slide. This field will ultimately have about 25 to 30 million barrels. We have about 22 million barrels of 2P right now. We think it'll grow to 30, 35 million barrels, and peak production will probably be 15 to 18,000 barrels. Multi-sands, typically these sands have 8, 9, 10, 12 stacked reservoirs. So it's developing it, doing dual completion. Sometimes you do 3 zones in one string and 2 in another string, and then you just have sliding sleeves, so when the zone dies out, you switch sleeves and produce the upper zone. The structure map, which shows what we're doing. So the producing well we have now is called the Oza 1 well. We're currently going into Oza 4, which is kind of at this depth, the 7,000 depth. It's kind of in the crest of the structure. So we're perforating that zone. It's got about 2 million barrels of recoverable oil. The Oza 2 well, which was historically drilled on the wrong side of the fault. We're going to sidetrack that back into the main structure, intercept 3 productive zones, and then go in and start drilling development wells in the crest of the structure. Then there's a low-risk exploration place to the north that will drill as well. So just, once again, this just shows, the significant opportunity that's there. These projects, we are typically always looking for investment partners to come in with us. And at some point, when you're 3,000, 4,000 barrels a day, you could do deals with some of the trading companies. Shell have a few interesting products. Shell Trading do for pre-export finance. And some of the local banks, they've been burned in the past, but we hope that money does kind of come back, working with the local banks, and some of the foreign banks are now looking at developing projects like this. What's great about these is the fiscal term. So historically, onshore fields in Nigeria would have a 20% royalty. Under the marginal field program, it's a sliding scale royalty, so you pay a farmout royalty to the original owners, which is NNPC and Shell, or Total, whichever the case may be. And then you pay a government royalty. So their sliding scale based off barrels of production. So around 10,000 barrels, you're typically around 9-10% of the royalty. Corporate taxes are lower than historical taxes on just like a JV asset, which was presented earlier. Are on some of the deep water bid rounds. So the fiscal terms are very good. At $75 a barrel, we net back about $47, $48 a barrel. So great opportunities and great returns. That's kind of our presentation.
Very much. It's a great pleasure. A lot of fascinating content there. So next, we'd like to welcome Stacey to the stage. I've been on many panel sessions with Stacey, and insights have always been great. That's just been complimentary towards you, that's fine. So you have to click another point. Okay.
Thank you, Matt, so much for inviting Gas to Cameroon to present. I think Matt was thanking me because I introduced Wade, who had 2 companies to present for the price of 1. I'd also like to thank Chris Moyes for sponsoring the Farmout Forum. And I'm here to present the Matanda block in Cameroon. It's an onshore gas farming opportunity with the existing local market and fast-track monetization. So there's our disclaimer, and in addition, I'm not a geologist, so that's my disclaimer. Gas to Cameroon has been operators of the onshore Lombada field in Cameroon, so we are actually producing gas in Douala City, about not even 10 minutes from our office. I was there last week. We are here to present the neighboring Matanda exploration block, which we have a 75% 75% interest and operatorship of. Gas to Cameroon stands out among the other presenters here, although everyone's presentations were very interesting. We are actually in country producing gas and selling it to the local market. We employ 143 Cameroonians. We employ, I think, more than 95% Cameroonians. Sorry. And we are supplying, I'll go to the next slide. We are supplying Dangote cement, cosmetic companies, the local brewery, with very much needed gas. And sadly, our current production is a bit on the decline, so that is why we are here to present you this fabulous opportunity in country, which is actually a proven field. Matanda has 7 wells drilled, 5 by Gulf in the 1970s and 80s, 1 in the 50s by the National Oil Company, and 1 by Glencore in 2013. All of those wells have been discoveries. The block is 1,235 square kilometers. It's located next to our current producing field, and again, we have a 75% operating interest. The opportunity is substantially de-risked. Gas to Cameroon has carried out detailed technical work and subsurface work. We've proven an active hydrocarbon system in place in the Douala Basin. We recently tested the tertiary discoveries in analogous wells. And there's the neighboring Bamoro block has a discovery on it. There is a mean prospective resource of 1.7 TCF in the onshore Cretaceous and 163 BCF in the North Matanda Cretaceous. Where Gas to Cameroon are looking for an industry partner to farm in to up to 37.5%, although everything is for sale. That was a Demi Moore film, I think. So we need a little humor here. We've done a ton of well planning. We've done detailed well planning to drill a shallow onshore vertical well with the depth of 1,250 vertical meters. There's a tertiary, the Marula tertiary prospect is what we identified to be drilled. We have a full geotechnical data package if anyone's interested to sign an NDA with us. And we're targeting completion for next year, Q2. We've already sourced a lot of the long lead items and pre-booked some of the services, and we do have a rig in country, which is what makes this opportunity even more interesting. God, I didn't realize my time's down. Okay. There's a tertiary play type, stratigraphic stack channel, and fan sands terminating against faults with half-graben geometries in upper sections. And the upper Cretaceous clay, stacked upper Cretaceous channels and fans, structural trap geometries, including positive flower structures, and potential for stratigraphic pinch-out traps and combination traps. Gas de Cameroon is up to date with its ESG programs and have been since 2012 compliant with ESG in country. We also have a record of a lot of social programs in country since 2012. We've sponsored football, hospital, we've assisted local hospitals and schools and other aspects of the community, doing very positive work in Cameroon since 2012. In summary, this is a very exciting opportunity for near-term and fast-track monetization of an underexplored and underdeveloped area in a very stable country. There are very, very good economics and commercial terms in the standard PSC that we have for the Matanda block. There's no royalty. There's a very competitive 80-20 split between the contractor and the state. SNH has the National Oil Company has a right to back in. Cameroon stands alone or is one of the countries that once there is a discovery, the country allows the operator to continue production while they do the necessary applications to go into development. So time isn't lost. If we do have condensate, for example, we can begin producing that and selling that whilst we're in the process of developing an early production facility and building a pipeline. There is also the opportunity to extend into new markets. And just in summary, there's a mean prospective resources of 1.7 TCF and 69 BCF, with a chance of success of, they didn't write this, but I have it in my text messages, 40 to 43% chance of success on what we call an exploration appraisal well. We are, again, looking for a partner. If anyone is interested, please feel free to find me. I'll be here all week until Thursday, and thank you for listening.
Cool. Stacey, thank you very much. Stacey's done a fantastic job helping us put together this Farmout Forum. She's helped reach out to companies, so I'd like to thank her for that, Stacey. Thanks. Okay, next we welcome Phil Dimmock to the stage. Phil's a bit of a legend of the industry. And he's going to be presenting to you Saito Main Principe Block 12.
Okay.
Phil.
Can they make that bigger?
Yeah, is it possible to put this on full screen?
The clock's this big and the slide's that big.
So this one's on full screen.
He knows some error, that's good. Yeah. Okay, good afternoon, ladies and gentlemen. Thank you, Matt, Chris, Martin, for the opportunity to speak here. I want to speak about a farm-out opportunity we have for Block 12 in Sao Tome and Principe. So just a little bit about Owando first. In case you don't know who Owando is, just look at your lanyard, it's written on you, so everybody's Owando today. It's a Nigerian company, quoted on the Lagos and the Johannesburg stock exchanges. It has recently done a major deal, and it is now producing something like 40,000 barrels of oil equivalent a day from the 4 onshore blocks, OML 60 through 63. So it's up here. We now have 5,000 staff and contract employees. We've also got these interests offshore in Nigeria, OML 145 and OML 131. And what I want to talk about this afternoon is the EZ blocks 5 and 12 in the exclusive economic zone of Sao Tome and Principe. I've already been preempted on this slide here, which is a cross-section of the Jackal 1 well, which was drilled by Shell and Galp in 2022. And the great thing about it was that it proved the existence of oil in the Campanian out in Sao Tome and Principe. And also of good significance was the existence of good quality reservoir and of course the source for the oil. Everybody's known about the seeps in Sao Tome for quite a long time. There's the seep in the well, the onshore well in Sao Tome, and also seeps in Principe, in Sundi. So we've got oil, that's the main thing. Partly because of that, there's a lot of activity in the country in terms of licensing. Already Shell was in blocks 10, 13 and 11, and only a few months ago they took over block 4 100%. And people who know something about the Atlantic margins are Petrobras, and they've moved in with Shell on blocks 10, 11 and 13. Total Energies, not to be left out, have extended their reach from block 2 also into, well, the other way around, I think. Started in block 1 and moved to block 2. And Cosmos, of course, has been there for a long time, and Calp has been there for some years as well. So all those people who found a lot of oil in Namibia are here in Sao Tome and Principe. Oando has interest in block 5 and block 12. To say that there is a lot of seismic now in the country. There's something like 30,000 square kilometre in all. 16,000 of that is that green line around here. It's a 2017 survey, which was operated by Cosmos. Amazingly enough, to the people who had to fund it, was that we reprocessed that seismic in 2022, only 5 years after the original processing. So much has the seismic processing improved in that time. And one of the reasons was that the Jackal 1 well, which we don't know the details of, but our operator Galp does, that it showed that the velocity modeling was about 200 meters out, so we've redone the velocity modeling, in fact, for all of these blocks, but particularly block 12. So, our work program, the PSC, we signed the PSC in 2016 and had the obligation to do 3D seismic in the block. We, in fact, with the big survey, covered over 4,000 square kilometre, and then we did the magnetic and gravity surveys at the same time. We've moved into phase 2. There's very little obligation there. And as you can see, we've had 2.5 years worth of extension. So the expiry is now August 2025. And we didn't have any obligation, but we used that time for the seismic reprocessing, which altogether has taken about 2 years with the reprocessing itself and the reinterpretation. So at the end of this current phase in August, we move to phase 3, where there is a well commitment for a deep water offshore well. I think we've seen quite a few of these this afternoon, but you have the classic Atlantic margin upper Cretaceous plays there, with the source coming from the Albion and Turonian, Albion, Sedimonian, Turonian sources, and then above that the E3 source in the Turonian, Coniacian, I don't know how to pronounce that, Santonian, and that was well proven in the Jackal 1, and the deeper source is proved by Seibo, Kumi, a number of fields in Gabon, and of course by the Stoops. The reservoir's not too much in question. You've got multiple stacked upper Cretaceous classic reservoirs, and it's well trapped. There is a good regional seal across the top of the upper Cretaceous here. So looking at the prospects, our main prospects are Baleo and Bayo-Arena, which we now believe are one prospects, and the Alada. And then we've got follow-on leads, Sardina, Varina, Argula, just for some, there are others. This is just this one area here. But just within this one area, we have total mean recoverable resource of about 2 billion barrels, so there's plenty of running room in the block. Just looking at the Bayo-Arena one in a little bit more detail, it's a normal deep water fan. And it drapes over the top of the high created by the Ascension fault line. It's three-way dip closure, it relies on the channel sealing. We do see dimming of the amplitudes, and we might even get help from the fault line itself, might be causing the seal. And as you can see, there's quite a nice clear fan going out there, well shown by the amplitude map. And then our other prospects, this is one out. Oh, okay. Then the other prospect is the Alada, which is an Albion prospect just underneath here. And then we are doing, our operator Galp is doing a terrific amount of work on QI analysis, and as you can see from the spectral decomposition, we've got a pretty good showing of the deep water flan there. The water got shuffled. Here's the Elder prospect here underneath the high structure, and that's a very large prospect. So in conclusion, we've got all the petroleum system elements are present. Major companies are expanding their presence into Sao Tome and Principe, so if anybody wants to come, they need to be fast. The source, got the Albion and CT sources are proven by the Seibo Kumi fields and the oil seeps, and then the OAE3 system is well proven now by Jackal 1. There's good maturity. The reservoirs, multiple stacked upper Cretaceous classic reservoir fairways. All the work obligations are fulfilled. We're looking for a partner to help us commit to the well coming up in the end of the second quarter of next year. So thank you very much.
Phil, thank you very much. It's a great pleasure. Thank you. Do we have somebody here from Simple as Oil and Gas? Yes, we do. Perfect. Now we're heading over to Angol, which is my second home. The stage is yours. Thank you.
Hi, good afternoon. I'm Mario Mendes. I'm CEO of Fincrest, which is a financial institution that has a mandate from Grupo Simple as Oil to raise funds for their exploration efforts. Today, I'm going to talk about Con 6, which is in the Kwanza Basin, and the investment thesis is very clear. What we want is to restart production in the Kwanza Basin. which historically has produced more than 29 million barrels of oil over the years. And it's been, however, the production had to be paused because of instability. There was a civil war, but now the war is over and it's time to get back to business. As an operator, GSO is the operator that owns 100% of the block. And it's been drilled before. It has 5 wells, 5 exploration wells. And there's 283 million barrels of unrisked resource and 59 million barrels of risked resource. I'm not a geologist, but they can knock themselves out with this map. And we also decided to focus on 3 major leads: lead 1 north, lead 1 south, and lead 2. We plan to run more seismic, about 236 kilometers of seismic starting January 2025, and do the spudding in August 2025. We're looking for a partner basically to diversify our risk. We own 100% of the block. We're willing to negotiate some participation. And of course, the farm-out is an option because we also have other participation in other blocks. Generally, the partner will have to pass all the sanctions clearance, and it has to be approved by our regulator. And of course, we're here. We have a booth, so if there's interest, we're easy to reach. Thank you.
Thank you very much. Okay, I'm going to quickly run through DRC. There's nobody here from DRC, is there? No, perfect. Okay, I'm going to quickly run through this opportunity with you. So the DRC, they had a license round previously. That license round has now been paused and they've moved into a phase of direct negotiations on all of the acreage. So there are 4 key basins here. Starting off in the Quebec Central, it's a 12-kilometre deep basin with proven mature source rocks, only 4 wells drilled. And from the basin modelling work that's been done, you can see there's an oil kitchen and a gas kitchen sitting in that basin with awesome TOCs and awesome reservoir qualities as well. So the TOCs are on the left and the reservoir qualities are on the right. Coming down to the coastal basin, so this is a long trend from the Cabinda fields in Angola. One of the wells had 245 metres of sand with 17.5% porosity. This is where the salt comes on shore to give you subsalt plays. And you can see in this seismic line where the salt has been interpreted, and you have nice rollover structures and 4-way closures sitting beneath the salt. So there's a huge amount of opportunity to go and drill these onshore, drill subsalt plays. In Lake Tanganyika, so this is a interior rift basin. There's a really good 2D data set over this. And you can see in this seismic data, you've got a rift basin of thick sediments. You've got 6 kilometres of sediment sitting within the rift basins, and you've got some really nice brightening of amplitudes against the faults sitting within that rift basin, which are quite likely to be gas or hydrocarbons sort of trapping in that footwall structure. And then coming up to Lake Albert, so this is a symmetrical rift basin. As you know, in the Uganda side of Lake Albert, there have been lots of discoveries. The Kingfisher discovery by Heritage Oil and Gas and Tullow a number of years ago had 560 million barrels in place and flowed at 14,000 barrels of oil per day, which is a phenomenal flow rate. This has now been done by Total, CNOC and Uganda National Oil Company. In the Ugandan side, on the DRC side, which is to the north there, you've got the same structures, the same plays, but they haven't yet been drilled. but there's a really good 2D seismic data set on the DRC side. I've put the kingfisher and the Gasser fields on there so you can see they come right up to the border of DRC. And that 2D seismic data set is available, it's good quality, it's 900 line kilometers in total, shot in different phases with far offsets. So that 2D seismic data set is available in a data room, so you can go and look at it, work up plays on that flank of Lake Albert. And so DRC are going to announce a restricted call for tenders. Their plan at the moment is to reinterpret that existing data set. They hope to acquire 3D data in the lake, and they're looking for support for that. They're reviewing that taxation, reviewing the legal conditions, and then in June 2025, in 6 months' time, they're going to announce a call for tenders for those blocks in Lake Albert. Okay. Heiner, I'm going to skip to you. Come on. Okay, so I'm now going to call to the stage Heiner Malkovic, who's a good friend of mine, and he's going to present Carbon Limits Nigeria. Thank you.
We're changing gears quite a bit. I'm not here to talk about any blocks. I'm here to actually talk about something that is emerging throughout the world, which is around the price of carbon. So one of the quickest ways to reduce emissions globally would be to reduce emissions from oil and gas production, such as methane leaks and flaring. And more than 80% of all these emissions could be done for less than $20. Currently, there are big funds being set up by, for example, the World Bank, which pays for performance, i.e. improved emissions statistics on the fields. But in addition to that, there are also many voluntary markets and corporate clients that buy carbon offsets as part of their net zero strategy. And as you might have seen, obviously, there are many different types of carbon markets, but for industrial emission reductions, these type of offsets are becoming much more prevalent. We've been in Nigeria for 15 years doing this, and we have, as we'll see in a couple of slides, we have done more than 10 million tons worth of carbon emission reductions in Nigeria alone. So, why am I here on stage? I think there's really three ways of thinking of this. One, most obvious one, is obviously any operator that have a field anywhere in Africa where there is either methane leaks or flaring. The good news is that we are there to help you in the sense that you can make money from your problem, i.e. your emissions. So that's one of the reasons why I'm on stage. So please come and see me if you find it interesting. The second thing is, of course, this market, depending on where you are based in Africa, there are many other type of carbon projects, such as clean cooking, etc. As I say, the industrial emissions space is increasing a lot. So a second group of interested people for us to talk to would be investors who would look to have carbon credit project exposure. And thirdly, of course, buyers of carbon credits. So to then go a little bit into what we do. In Africa, we have operations in 3 countries. Obviously, by our name, you will hear that and you will understand that we are based in Nigeria and we are having a lot of projects there. But in addition to that, we're also doing projects now in Algeria and in Egypt. Just to give an idea, in Algeria alone, there's 22,000 kilometers of gas pipeline. As all of us who work in the oil and gas industry, we know that those are prone to leaks. And again, those leaks are what we go in with infrared cameras to check, to measure the emissions, and then to repair those leaks or remediate those leaks. And that delta is the creation of the carbon credits. Again, methane is around 30 times more damaging to the environment than CO2. So you get for the sake of argument, a ton of methane leak is the same as 30 tons of CO2. If we then focus, for example, on Nigeria, we have, and I'm bringing four examples here. All of these are flare projects. We go in with the operator, we establish what is the current rate of flaring. We then find ways to commercialize the gas. And then in return, the operator gets sales gas instead of a flare fine, and also gets carbon credit in addition. And obviously, you also have now an evacuation route for your associated gas, which means that you are less restricted when it comes to flow rates from existing wells or new wells that you might contemplate. I've given 4 examples here of projects we've done in Nigeria. The first one is not only the largest in Africa, it's also was the first in Africa. As you see, that has now generated more than 10 million tons of CO2 emission reduction. The second project, again, a flare project. These are, of course, now been in production or in operation for quite a few years. So obviously there is no more carbon credits coming out of these projects, and that's why there is a difference between the monetized tons and the total tons that are saved. So basically, how can we add value to your organization? We can, as I said, we can set up and discuss this in detail. I think maybe to just illustrate a little bit on the type of projects that we're able to do, it's either flare-out projects, methane leak detection and repair, as well as vapor recovery units. As I said, we're working, principally speaking, anywhere in Africa. At the moment, we have operations in Algeria, Nigeria, and Egypt. Thank you very much.
Hi, thank you very much. Okay, before we move on to the next presentation, I'd just like to quickly introduce you all to Catherine quickly. Catherine works with Biogas Unite. They were going to be presenting today, but they have a presentation later in the week. So I'll just give Catherine a minute just to explain who she is and what she's doing.
Thank you very much, Matt, for being naughty again, because we had a presentation scheduled here today, but my block wasn't big enough to be presented to you. Honestly, I'm not even in the oil and gas industry. I do biogas, and I am here at this conference to introduce and offer a new initiative that we're launching in the cooking energy sector. 990 million people don't have access to clean cooking technology, and I would say we all have a responsibility there to take action, and we're launching a huge Pan-African initiative to tackle this issue. And I would like to invite you all to come to our presentation tomorrow, where we'll go through this in detail, 30 minutes, technical session at 4:30 p.m. At the technical hub in the exhibition floor, on the exhibition floor. Thank you very much.
Thank you. I've been watching what Catherine and her company have been doing for a year or so now. They presented last year. It's fascinating what they're up to, so please do go and find out more about it. Okay, just to wrap things up then, we're going to finish with Innocent Oil and Gas, who have a block offshore Sierra Leone, block 2020A. So, Innocent Oil and Gas have 100% equity in this block. It's in the southern part of offshore Sierra Leone. It's an underexplored acreage and it's conjugate to Guyana, which means it's a relatively exciting place to be looking at the moment. Innocent has just signed a 4-year license extension on the block, which has given them more time for their work programme, and they're looking for a farm-in partner to interpret the 3D seismic data sets they have on it, and then to support them or enable them with a drill drop decision by the end of March 2028. Innocent have done a very thorough interpretation on the 2D data, and they've mapped large structures, and they're offering a large equity position for a company to carry them through to license the 3D drill well. So this is the data set they have. There were 2 wildcat wells drilled in the 80s, and then in the 2000s, there were 3 major discoveries drilled in this area, in these blocks, which were Venus, Mercury, and Jupiter, and they were big discoveries which were never developed by the oil companies that drilled them at the time. At the end of the fourth licence round, these blocks were awarded to Edison, ratified in 2021, and there's a CPR report on these blocks, which was conducted by Ryder Scott in 2022. That CPR report, there's an image on the next slide of that CPR report, and that's available to any company that has an interest in these blocks. So these are the leads they've mapped. There's 16 leads in total. These have all been mapped on 2D. They're yet to license the 3D, but they're looking for financial support to license those 3D data sets. And you can see they've mapped out a number of leads at different stratigraphic intervals, an Aptian, Cenomanium, and then Albion prospects mapped out at different levels. And this is from the CPR report, so these are those 16 prospects you can see listed, and you can see a number of those have huge volumes of gas and condensate interpreters being present in them. And importantly, that CPR report indicates the porosities between 30 and 26, so they're fantastic porosities. So if you have interest in these, Tudor Hall Energy are the guys supporting Edison, so you can reach out to me and I can put you in contact with Tudor Hall or put you in contact with Edison. And then, just to quickly skip back, apologies. And then finally, offshore Senegal. So this was from Africa Forteza. Roger Beale, who many of you know very well, was hoping to be here, but unfortunately had some family things he had to take care of, so he couldn't make it. So he has a block which is northeast of Cape Verde. I can scroll through here. This is basically the background information about the company. They have the Dienda PSA permit. So this is the same play as the Sangomar field in the deep water, with the reservoirs coming into the onshore, and they've got multi-TCF thermogenic gas potential sourced from those Paleozoic shales which sit in the offshore. They've got a forward-looking work program. So they plan to drill a field development well in the Gadiaga field coming up. Then they've got a 3-well drilling program after that, which will be production wells, and then after that they've got another 4 prospects they're going to drill appraisal wells on. Their 2 plans are either to run a gas to power project, which is what they call their midstream probe option A, option 1, or they have midstream option 2, which is a small-scale LNG or compressed natural gas distribution network into industry, into mining, into agriculture within Senegal. So they're looking at domestic markets, supplying that domestic market either with gas to power or with LNG or compressed natural gas. And what they're seeking is funding for those appraisal well drilling programs, and then of course for the development of the field, and they're offering a significant equity position in exchange for some financial support for drilling those wells. Okay, cover that. Okay, so that brings us to the end. Stuart Lake's decided to join us, which is a great honour. He can explain to you why he was a few minutes late to list his presentation after the beginning. Stuart, do you want to quickly stand up and run through your presentations? Yeah. Okay, so you had 19 Farmout presented today. Thank you very much for listening to those. If you have any questions on those, you can reach out to us at Farmout Angel Envoi Ltd, and then we can hook you up with the relevant companies who have presented. Can we go back to the first presentation, please? It was called 01. Sorry, session 01. How are you? Good. Yes, perfect. Thank you very much. Okay, you've got a forward and back clicker and a pointer.
Brilliant. Good afternoon, ladies and gentlemen. Apologies for being late. Just want to go through two opportunities, one on deep water Somalia, another one on onshore Timor, in East Timor. First one I'm going to talk about is Somalia. 3 PSAs that were signed in March this year. It's an investment opportunity in early production with exploration upside, with Liberty. Slide's not moving. Okay. They have 3 blocks, in the north 131, and in the south 190 and 206. I'm going to quickly go through the generalized stratigraphy, talk about the petroleum systems very quickly, and the focus on the PSAs and the summary, and then talk about what opportunities they also have in the offshore space for onshore Australia. Critically, on the geology side, you've got a good Jurassic carbonate system and Cretaceous carbonate system up in the north, which is under the PSA 131. And in the south part of the country, you've got a much more classic system coming in the Cretaceous, with these river systems feeding into these offshore deep marine fan systems. We have 2 provinces essentially. To the south, we have a sort of gas province largely, as we're all familiar with, the Roviva Basin and the Mozambique Channel. And we also have the Permo-Triassic source rocks, which are the Custrine source and the Marine Jurassic source. So north we have the confluence of the East African geology, like the Jubal Basin opportunities and the Persian Gulf geology in mid-Somalia. We also have the carbon platform opportunities. Liberty Petroleum's been in the area since 2000. They have the Seychelles project. They've been working in Somalia since 2013. They've worked up the petroleum systems in terms of understanding different ages of where everything is and how it's connected. The critical thing is, and just to summarize on the right-hand side, they've got a very good oil-prone system that is stacked through from the Triassic upwards into the Jurassic and Cretaceous. So you have the Bok, the Adegrat, the Urandab and others. Critically, 131 up in the north is the Leopard prospect, highlighted in red there, the green opportunity. It's about 8 billion barrels. It's a big carbonate reef on a structural high, build-up, stacked carbonate systems. To the south there, the TPAO have recently acquired lots of blocks in the area and are going in there with some large ships to acquire seismic and potentially drill. They've got a lot of security systems there in place. We work with Castavale ourselves on the security side. Leopard has 3 levels with 3 different closures at different levels in the Jurassic, Mid-Cretaceous and the Mid-Jurassic. To the south of us, we have the coastline opportunity and Sami Holdings to the west. The southern block, 206 and 190, you see in the side of the line, you see these detachments. Each of those little closures above the detachment have amplitudes and good AVO responses. Then you have the detachment on the shales, and then beneath that you have the slope fan systems that go into the offshore. If you go up into that slope fan system, you see flat spots beneath the system, so you've got a nice regional seal, you've got good source rocks in the Sandemanian and the Aptian Albion systems to the south. It's very similar to Namibia in terms of an analogue, because the Big Eye mega closure is sort of stacked fan lobes of Albion H with a basin floor fan complex. So if you compare it to Somalia and Namibia, it has good source rocks, good detached shales, good topaz, domains, soak floor flans, and has the right charge and maturity. So what we have is we have the PSAs have been signed in March this year, and the signature bonuses were paid. 5 vertically stacked liquid-prone oil source rock systems. We have an extensive fair playway with abundant running room. We have proven analogues in Abu Dhabi and Mozambique and Namibia as case points. The new model for oil proneness has been presented at AAPG in August, which I did present. And then the Somali deep water and ultra deep water has been a totally undrilled opportunity, something I've worked since 1986. And the prize is big. It's the company making the opportunity, so reach out to Liberty or myself if you're interested. I'm here until Friday this week. Billion barrel potential, lots of running room. The last thing they also have is in Australia, this is something I worked up, 5 blocks, they have 80,000 square kilometres, 20 million acres, for the Americans in the room, officer base in onshore Australia, big volume potential. This is an old Shell block. I used to be a VP in Shell, but Shell drilled off structure for some reason, I have no clue why. They drilled 3 wells off structure. 1 well they drilled on structure has been breached. But if you look at the volume potential here, it's massive. We've used this new Arab technology which we've used in the Cooper-Aranga Basin, the Perth Basin, where we can see with the radiometrics seeps coming to the surface. We can have support with AVO, we have support with gas chimneys, and these are above these structures. Each pool size is at least 200 million barrels. There's lots of them. It's onshore, it's 1,500 meters depth, $4 million a well. It's just easy to, it's a shoot and run. Everything highlighted in green there with the star has anomalies associated with it. There's 21 AVO anomalies along that basin. All missed by Shell, but we know Shell misses things every now and then. Right, Timor-Leste. I'm the Chief Operating Officer of Timor-Leste. Sir Owen Osborne, who is former Miss Australia, is the CEO. So the team was the beauty and the beast. And they keep calling her the beast for some reason, so that's unfortunate. I'm going to talk about the early production opportunities and the exploration upside. So we have 2 onshore PSCs, we have CPR, we're looking for $20 million of funding for 3 appraisal wells. We have 3 discoveries out of 3 wells with extended well tests for equity. The discoveries made were 2 oil and 1 gas and oil. They're all onshore. They were the first wells since in the last 50 years, essentially. If you remember, Timor had a bit of a punch-up with Indonesia from about 75 to 2000, and then they got their independence and everything's been hunky-dory since. We have, it's an onshore conventional play. It's 3,100 square kilometers, shallow reservoirs, 1,500 meters, 44 API oil. We expect an experienced leadership team. The infrastructure is placed, is there. The planned production is next to the port facilities and industrial service centres supporting the operations, and the robust economics are there because it's break even at less than $20 a barrel. We've been there since 2016, and we've been doing seismic, we've drilled wells, we've worked through COVID, and then we've come out, we've got a funding agreement with Timor Gap where they're now paying 30% of their share. So there's only a carry going forward of 20%, and it's the right postal address. There's $73 billion of revenue being put into the petroleum fund for the offshore oil and gas. We intend to put money into that for the onshore discoveries. So we work with Timor Gap, which is our partner, so we're 50-50. As I say, Timor Gap are paying 30% of that, and we carry them to first production, 20%. The fiscal regime is very good, it's very benign in the sense that 95% of the revenue is allocated to cost recovery. We actually have a cost recovery pool of over $100 million. The revenue royalty is 5%. There's no backing rights by the state. The profit oil split is very good for the operator. Corporate tax rate is benign. And the national currency is US dollars. And as I say, the cost recovery pool we have is $104 million. These are the 3 fields we've made so far with Karoo, Kumbali and Lafayette. First 2 on the left are the oil discoveries, and on the right is a gas play at 2 different levels with also oil rim associated with it. Our plan is to do appraisal wells for the oil discoveries with extended well tests and 1 appraisal well on the gas opportunity because of the upside. This is the infrastructure in the area. We have our own base there up in the top left, with which can accommodate 150 people, has the rig and everything else. There's a main freeway being built by the Chinese for $300 million going through the area, goes through connects all our fields, that blue line all the way through the area. The structures are highlighted there in terms of discoveries. The 2 green ones are the oil discoveries, the red one is Lafayette, is the gas discovery. Roos is another opportunity I'm going to talk about in Block C. The CPR volumes and resources are identified on the right-hand side, and we have a power plant in Block C which imports about 3,000 barrels of oil per day to power the country. Obviously, finding hydrocarbons beneath that power plant, that could be very beneficial to the country. There's also an international airport that's being built in the area, which is now being used by Santos as a helicopter base for their offshore operations. So our first appraisal will be on Karoo. We have these stacked objectives with stacked reservoirs and pay. We've been drilling a deviated well up dip to that oil discovery. And that's a picture on the right-hand side of the old Australian tests in the early 70s, where there weren't any environmentalists around, and so they just turn the dial and show you how it flows. As I say, offset wells produce anywhere between 216 barrels of oil per day, 180 barrels of oil per day, and so forth. So we're drilling in an oil province. 10,000 barrels has been recovered on the surface from seeps so far from over the last 50 years. So we're testing a 20 million barrel opportunity here. But the other upside, which is this thing, is Lafayette itself. Lafayette has this big, thick sand, as well as a deep carbonate gas play as well. But this big, thick sand is about 140 meters thick. It's regionally extensive. We have a gas-oil contact and an oil-water contact in there. We have 60 meters of pay in the well, but up dip it's a very large area. So we've identified how to appraise that successfully, but also combining with the other discovery made in Kambali, so we can combine multiple opportunities in the same wellbore. This could be volumetrically, that red area highlighted is actually potentially about 14 TCF. So everyone's talking about sunrise offshore and developing deep water. You can be sitting on it onshore, and it costs very little to get to prove that. So, and a billion barrels of condensate, which ties to get people's appetite, so to speak. The other thing is on Rooster, Block C. We've drilled 3 wells in Block A, but Rooster we haven't drilled yet. The important thing about Rooster is we see a very large structure that we've mapped off the site that we've shot. I've used that same arrow technique we used in Australia onshore Timor here, and that's the anomalies you see with the arrow technique pre-drill, and they fit with, I didn't give this data beforehand, I just told them to do the arrow technique on it, and all the structures that have been mapped are highlighted by the arrow technique. So this will be our focus going forward, so this is what we're looking for farming partners to come in, and the well cost here is about $9 million, 100%. And there's a cost recovery pool in there of $24 million. So very beneficial. Volumetrically, it's probably around 316 million barrels, pool size, and there's other running room. So if we do infill seismic and so forth, I'm sure we'll find some other opportunities. So the location's already been built and is ready to go. So and we have a rig in country, onshore, which we can move to this location at a moment's notice. So the transaction in summary, in the end, is highlighted here. We're seeking to raise $20 million of funding to commercialise our portfolio going forward. We want to use that for the 3 appraisal wells, extended well tests, early production systems where we actually have tanks, trucks and a convoy to export product. The team is shown here in the bottom left. We have a rig in country which is there for us to use. Positive cash flow will be delivered very quickly from first production, which also stops Timor Gap being carried any further as well. And so that's exciting in its own right. We think we have production as early as Q4 next year in the formal way, but we have EWTs working from May next year. As I say, we can do it less than $20 a barrel, a good valuation point for a partner to come in, and the cash flow modelling sort of shows off the 3 fields, assuming $70 oil, there's about $3 billion worth of revenue for the company. And if you want to reach out either to me, the Beauty or the Beast, or to Ellen, you're welcome to do so. Thank you very much.
Sure, thank you very much. Okay, so that brings us to the end of this session. I appreciate we going around a little bit. Thank you very much to all of our speakers. Thank you for everybody who presented. We have a Farmout booth in the main hall where myself, Envoy Moyes, will be based for much of the week. So please feel free to swing by, chat about Farmouts, and I hope you all enjoy the rest of the conference. Thank you very much.